Welcome back. What is going on, guys? It is September 9th, 12:45 p.m. Eastern Standard Time in the year of 2025. I am SquireTrades, and I'm going to cover the one execution that I took today. Coming into today, once again, not asking a lot of questions, right? We are bullish. That's it. That's all you need to know. My high time frame bias on the NASDAQ as it stands right now is bullish. The week looks bullish. I think we're going to go and attack previous week high. That is still a draw on liquidity for me. We also have all-time highs resting up here just north of 24,000. Those are kind of my two draws on liquidity that I'm looking at for this week and heading into PPI tomorrow, CPI on Thursday, and news on Friday as well. Daily, again, not asking a lot of questions. Still bullish. I was looking for an attack on previous day high and then lead us into previous week high / Friday's high. 8-hour market structure, where are we at? Still bullish market structure. Still making higher highs, higher lows, working on making higher highs, right? What we're currently doing is just consolidating at the top of a range. And the way that I like to think about consolidation is, take a spring, think of a spring and think of coiling the spring, right? And the longer that you coil the spring, or the more that you compress the spring, if you will, think of that as your consolidation. The more and more you coil that spring, the more and more you build up potential energy, the more and more that you consolidate, you are eventually going to let go of the spring and explode, right? But the more that you compress that spring, and the longer you compress it, the more and more potential energy you build up. And the more violent that reaction is going to be out of that range of consolidation, right? So same thing on the 4-hour over here once again. What do you see? Higher high, higher low. Higher high, higher low. Higher high, higher low. Higher high, higher low. It's simple, right? Still in bullish market structure. That's it. Don't ask a lot of questions. Don't overcomplicate it. Keep things simple. Okay? Drop down to your 1 hour. What do you see? And we should probably backtrack this to 9 o'clock. Here we go. What I see here is you have a liquidity sweep here. So I would say this acts as high resistance liquidity, but you'll see we actually end up sweeping this high resistance liquidity, so not a huge deal. But just generally speaking, higher high, higher low. Higher high, higher low. Higher high, higher low. Right? And this is still, I would argue, making a higher low. We've just swept some sell side liquidity being this 1 a.m. candle here. So dig down into the 15. For me, I don't trade pre-market. I'm sitting here and I'm waiting until 9:30. Let's fast forward a little bit. Typically, I don't trade until the first 15-minute candle closes. So I'm looking for that 9:45 to 10 o'clock. But then we're so close to 10 a.m., which is when the 4-hour candle closes, the hourly, the 30-minute, the 15-minute, the 5-minute. You've just got a lot of things closing and reopening at 10 o'clock. So I really like to kind of wait until 10, let the market shake itself out for the first few minutes, and then figure out what I want to do, right? So 9:45, we deliver a bearish candle. We deliver bullish engulfing, but we're still kind of just chopping around, not really doing anything, right? And this is where things got interesting for me. I really, 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 really enjoy when we get a massive sell-off, right? My higher time frame bias on the daily and the weekly chart is bullish. What I look to see is bearish price action being delivered sometime between 9:30 and 10:30. And then from there, I call that my manipulation leg. I'm looking very simply for a sweep of any kind of liquidity that can be whatever you want it to be, right? So I'll throw it on the screen just for the simplicity of things. I have a higher time frame bias. Boom. I have an opposing rate of liquidity. Then I look for a displacement, in general, typically in tandem with the fair value gap, probably a breaker, just some bullish PD arrays in this situation. And finally, I'm looking to execute and target some opposing liquidity. Very simple. Very, very, very simple. That's all. That's all I'm looking for. So my high time frame bias is long. I'm looking for an opposing rate of liquidity, right? So we generate up here. We sweep Asia lows. Yesterday we sweep this low from 315 from Monday's afternoon session. Sweep this low, sweep another low here, right? Look how much sell side liquidity we've just swept, okay? So at this point, I'm kind of down on the 5-minute chart thinking I need to see some kind of middle time frame bullish action before I'm willing to execute. I need to see a 15-minute swing failure pattern, otherwise known as turtle soup. Maybe I need a 5-minute market structure shift. Maybe it's a 5-minute inverse fair value gap. Maybe it's a 15-minute inverse fair value gap, right? Just something that says we're closing bullish and we're going to move long. That's all I need. Don't ask too many questions, right? We sweep all this liquidity. We don't leave behind a bearish 15-minute fair value gap. I'd argue this is a strong bullish close. Don't ask a lot of questions. So, what do we see again? This is where things got interesting for me. At this point, you've got your high time frame bias is long, opposing rate of liquidity. We just showed you this, right? We swept sell side here, sell side here, sell side here, sell side here. A lot of sell side just got wiped, right? Then we want displacement, typically accompanied with a fair value gap, maybe an inverse fair value gap breaker, whatever you want it to be. This right here, displacement, no market structure shift, but a displacement, could probably argue change in state of delivery. So we have this fair value gap on the 5-minute, and this is where I was looking, okay, I'm thinking I want to execute a trade now. This is at 11 o'clock. I'm thinking I need an 11 o'clock power of 3, right? For the first 10 to 15 minutes in every hourly candle, I would love to see it go the opposite direction of what I actually want it to do, right? And so you see, we open up, we kind of manipulate this high, but we come down into the 5-minute fair value gap. And this is when, in my head, I'm cleared hot to take a trade now. I'm looking for anything I can find to get into a trade at this point. And what do I see when I dip all the way down here? I see this 1-minute bearish fair value gap. Boom. If your eyes didn't automatically draw to that bearish fair value gap, inverse fair value gap, you need to go back and probably study inverse fair value gaps. That should just be staring you right in the face and saying, please trade me. At this point, I see the body, very important, covered this yesterday, the body of the candle close above the bearish fair value gap, confirming an inverse fair value gap, okay? Then, next candle's wick, I'm looking to get in. Again, don't ask too many questions. And I believe my fill was actually a little worse. I think I got this at about 20 points, a 20-point stop loss. Targeting, and this is where things get really fun. Look up here, look north. We have, if I can find it again, right here, equal highs. And I'm not making it up, right? You see that? 23, 857, 75, right? And then, what's this high? 23, 857, 75. So I take a line, draw this out. Boom. I'll label this so we don't get confused. Equal highs. I'm all the way down here on the 1, but I have a draw on liquidity up here being these two highs. I'm in this trade at this point in time. And actually, I think if I do this, it'll show you the trade I took. No, it won't. I'll show you in a second, though. And we continue, and continue, and continue, and continue, and continue, and continue, blah, 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 blah. All right? What ended up happening is I got in originally. I had 2 contracts on. We kind of made our move. We put in some work, and I moved my stop down here. It was about 8 points when I moved it, and I ended up getting clipped for $16 whole, right? But my original position, I was risking in the mid 80s. So I was able to, once price went my way, I was trailing on the 5-minute chart over here. And this is important to talk about. So I'm going to jump out of the charts, and let's go look at this journal here, right? This is the entry that I got at exactly 766.75. 766, we'll call that good, right? That's the entry I got. And what I saw is a 5-minute bearish fair value gap, but I was looking for this to get inversed, and then I was going to add a contract. Well, that never actually happened, so I was patient. I saw this candle here with no wick that I believed we were going to trade back to, so I didn't trail my stop. I instead said I'm going to just trail my stop to this low right here, and I'm not really going to worry about it, right? So this was the original position that I had on. Scroll down here, I placed a stop, and all I was really looking for was I believe this was 2.4R to this high, but these equal highs that you remember I have marked out all the way up here, this was the NTP, but all I needed to get good risk to reward, I just needed this high to be delivered, and then I could trail my stop, lock in profits, X, Y, and Z, right? So at one point in time, it looked pretty good. It was going my way, trailing 5-minute low, originally $80 risk, and then you can see, no lie, I cut in the moment down to $16 worth of risk. I basically have a free trade on the table, and I'm looking to get paid. I'm not doing anything crazy. I didn't trail my stop yet because there's a wickless candle that I expected that would be swept, right? Said that in the moment, took a screenshot in the moment. You can see it. There it is. Moved my stop, $16, expecting this to get clipped. What happens? Very next candle. Can't make it up. Very next candle. I journaled this in real time. You can see this. Live position. Look, connected to Trade of 8, right? Live position. I said, we're going to sweep that low. I don't want to trail yet. So I didn't. Next picture. Market hasn't done anything. Neither have I. Just consolidating, right? This is just consolidating. It's 20, 25 minutes of just doing nothing. So I'm doing nothing. You don't got to get antsy. Touch things. Do stuff. Just sit still and do nothing. Final picture. Here we are. This was live. You can see I end up getting clipped $16, right? And if I take this out of replay mode, what are you going to see? You're going to see that I was right. And you're also going to see that I did execute this. There's my executions for what it's worth. Boom. I ended up getting in on the retest of this fair value gap. I got a very good fill. We retested the inverse fair value gap, retested the bullish fair value gap that's overlapping, and I got in with a very, very, very good fill with my stops down here it actually ended up being about a $60 position, original risk, and I ended up getting it cut down to something like 16, right? So you can see I lost 4.5 points per contract, so $9, $18, whatever, right? Here's what's important. It's a newsless Tuesday. Yesterday was a newsless Monday. I said I was going to be risk off today. I said I wasn't looking for a trade and that I was going to be very patient. You take all that and go back and watch yesterday's video and then watch today's, and you see I'm actively living what I said I was going to do. I said I was going to be risk off. I said I was going to take a small position, if any position, right? I was patient all day. I had to wait until 11:10 just to get one decent opportunity. And it wasn't me chasing any of this garbage. I didn't get duped into longs over here. There was nothing. I didn't get duped into selling shorts and going against my high time frame bias. I was patient. I got in a good position. I waited for it to go my way. I trailed my stop efficiently. And I did absolutely everything perfect today. Was there opportunity later? Could you have maybe caught this out of this 5-minute fair value gap at 12 o'clock? Yes, but I'm done by then. I'm not continuing to work at 12 o'clock, and neither should you. That's lunch hour. There is nothing high probable about lunch hour. The guys in New York aren't trading lunch hour, they're eating lunch. You should be doing the same. Odds are, this is just indicative of low probability conditions here. When the market decides, hey, I'm going to run during lunch hour instead of run during the actual kill zone when there's volume in the marketplace and volatility and traders willing to execute, right? It's not doing that. It just says, I am low probability. Don't trade me. Okay, so don't overcomplicate it. I still think it's 1 o'clock. I'll call this live. Maybe we'll revisit it tomorrow. I still think there's no way intraday we don't take these equal highs today. I don't think we're leaving this target for overnight. I don't think we're leaving it for tomorrow. I think we sweep it today, but who knows? Something to keep your eye out on. Maybe go draw on your chart. Do whatever you need to do, right? Remember, keep things simple. Just the same way that I am. High time frame bias, opposing rate of liquidity, wait for displacement, trade out of a fair value gap or a breaker, right? Execute, and when you execute, target opposing liquidity. Target some equal highs up here, right? What else do you have? You have another high right here. Boom. That's relative equal highs with equal highs stacked. Then you also have another big draw on liquidity up here, right? I can label this one out too. In the moment when I didn't have this price action, this was my draw on liquidity, right? And it ended up getting hit, but I wasn't there for it. But I had to manage risk. Just keep it simple. Don't overcomplicate it. Don't ask too many questions. Don't try to get fancy and do too much at once. Keep things simple. Know your process. Plan your work. Work your plan. Do what you know how to do. Do what you've been working to do. Trust in yourself. Believe in yourself. And we'll see you tomorrow. It's been SquireTrades. I hope you all have a great day. And we will see you next time.